That's awesome.
Really?
Okay?
Hey, just
In 30 days.
walk out there and
That's
say something.
amazing.
Just by paying that one credit card.
One credit, and they told him, you have a 97% chance of getting this credit card. He applied and got it. And I said, now watch your interest rates.
Right.
They're gonna get you. And I said, well, put the credit card away.
Right, but
Right.
Because
Legal
they're
ready.
gonna get you
Right.
30%.
Good afternoon.
Oh, were we being filmed?
Wow, there's so many of you here.
Packed house.
Packed house, standing room only. Well, thanks for coming. This is actually our first time teaching this program, or this class. So we wanted to touch on alternative lending as an alternative to conventional conforming financing. What does it mean? How can you use it, and how can you use some of these programs possibly to close a few more deals this year and beyond? So, my name is Matt Lipp with Certainty Home Loans. This is Paul Bryan, both loan officers on our team. So, what we'll talk about today, we'll talk about conforming versus non-conforming, the rise in the market share of some of these programs, and then we'll go through the most popular, most prevalent programs that kind of fit into this bucket. Okay? So, conforming. Paul, what's a conforming loan?
Conforming loan is a loan that is backed by Fannie Mae and Freddie Mac. We have to follow their guidelines, their loan limits, their down payment structure, everything. So when we underwrite a conforming loan, we're underwriting to the Fannie Mae, Freddie Mac policies and guidelines.
So that it would be the Fannie Mae, Freddie Mac box, if you will, and they're going to set their own limits on, like you said, loan limit, on credit, on debt to income ratios, on reserves, what type of properties they're going to securitize, etc. So those would be your conforming conventional loans, which we are not talking about today, but we're trying to differentiate the two.
and they make up what percentage of the market, the conforming?
Oh, I would think they make up
90?
85 to 90% probably. But what we'll talk about is that 85 to 90% is pretty stagnant, whereas, I'm sorry, that's the wrong term. The 85 to 90% is actually shrinking a little bit because of the increase
Of debt.
the increase in some of these programs. The prevalence of them is taking up slightly. They're taking up some more market share. So non-conforming, basically something that is outside the box, not sold to Fannie Mae or Freddie Mac. So it could be something that's above that conforming loan limit. Could be something outside of the credit guidelines or the program guidelines. This is what we're talking about today.
So you call it jumbo, you consider that a non-conforming loan?
Jumbo is non-conforming. I didn't include it in this program or in this class,
Right.
but a jumbo loan is considered non-conforming. So
But they're stricter than Fannie and Freddie.
yeah,
I think.
I mean, a conforming
Jumbo loans.
loan is going to be backed by Fannie Mae, Freddie Mac. That's it. So jumbo loans, if it's above that loan limit, those are backed by private investors, private banks. Not private bank. I mean, it could be a public bank too. But I did not include jumbo because we're going further outside the box here. All right. So the growth of we say non-QM as QM is qualified mortgage, which would be fits inside that box, conforming. Projected to be robust again this year, and is still the only area with significant gains in volume in the mortgage industry, which is what I was saying is that it is gaining in market share.
Can I add another thing about QM?
Sure.
Uh,
I changed that too.
in conforming, you have to verify income. You have to verify, hey, Paul Bryan works at Certainty Home Loans, and they have to get a verification. Pay stubs, W-2s. Not, QM or non-QM, they might say, hey, we want A, B, or C to prove that he's in this business. Is that a good way to explain it?
Alternative documentation.
Alternative documentation. So
So they don't have to show tax?
No, I mean there's like we said, there's 5 or 6 different ones, and each one has their own what they're going to ask for and what they're not going to
That's the hard one for
ask
self-employed people.
for. The first one we'll talk about is for self-employed.
Yeah,
Is a bank statement loan.
okay.
But yeah, we'll get.
and that's all of us in this room.
Right.
Even though I get a W-2, I'm still self-employed.
Oh, really?
Yeah, just got mine. So who is this going to be used for? Many self-employed, all of us, wanting to purchase a home who might need a bank statement loan. Millennials are expected to drive the housing market in 2020, and most of them might have either lower credit scores from incurred debt or possibly high student loans. So some of these programs might be useful. We're also going to talk about an investor loan that is ideal for people to grow their portfolios as an alternative to hard money. All right, so the first one, investor cash flow. Paulie, have you done one of these yet?
Not yet, but I know a lot about them.
I was going to say
Go ahead.
this is another alternative to hard. So this is not hard money. This is an alternative.
This is our favorite alternative to hard money. So what, for anybody new, what is hard money?
Anybody not know?
Crazy high interest rates on short term, so it's for flippers basically.
That's for flippers. This is better for a buy and hold strategy.
Okay.
So hard money, you're going to pay 12, 13% interest. You're going to pay 2 points in the front, 2 points in the back, and like you said, it's for a short term. It's for a short term flip.
And why would someone use hard money? Is if they wouldn't qualify?
Because they wouldn't qualify. Because they don't fit in that standard.
Okay.
They don't fit in that standard box.
So why would you say this is for like a hold property versus
Perfect.
that?
This
Explain that.
This is better for a hold, simply because there's no limit on the number of properties you can finance. So you can have multiple properties. The best is that the rates are starting in the 6s.
Not in the 13s.
So what do we do? This investor cash flow program. We've got to be putting 20% down, so 80% loan to value. Okay. We don't look at any personal income to qualify.
So if we wanted to buy a property that's currently already rented,
Mm-hmm.
this would be the best loan for us to use. Meaning that like there's no personal income and like, we're contracted.
No, I shop this one at the unemployment office all the time. I sell this at unemployment. Yeah. No, I'm kidding.
You're saying that's where I should go to lead Jim back in.
The unemployment office.
We'll send you a copy of this.
So some of
Okay,
the
thank
some of
you.
the some of the gotchas. Okay, so you might be thinking like I said in the meeting, like, are we going back to you can get a loan if you have a pulse? Well, no. I mean, you've got to be 2 years out of any foreclosure, bankruptcy, yada yada yada. You've got to be putting the 20% down, so you do have skin in the game. You've got to have a primary residence with a mortgage on it that you've paid on time for 2 years.
Oh, so
So-
you can't use this for a
So
primary.
you couldn't use it to use a renter, basically.
If you're
I'm a
renting
renter,
yourself,
I'm trying to get in.
you're not going to be able to use this. You've got to have your own residence for 2 years.
Okay.
And you've got to be making on-time payments on that too.
No lights for 2 years.
I think it's like one. You could have like one late. I think for 2 years, but pretty much I'll say yes.
Not in the last 12 months.
So this isn't for a first-time home buyer?
No.
No, this is for investors.
Okay.
So what is the interest rate on this?
Rate starting in the 6s.
So I got a guy in Raleigh that's moving here to Atlanta. He's got a couple of Airbnbs up in Raleigh, plus his personal house. And so he wants to buy a house and some Airbnbs here. Would this work?
As long as he's got the 20% down and he's got primary residence for 2 years with a mortgage on it.
And one caveat that's not on there, when they order the appraisal, and you, Marty, your client says, I'm gonna get $1,500 a month rent off this property. When they go out and do the appraisal, they're gonna do a rent analysis, and if the rent's, in that market's $1,400, loan will not qualify. If the rent's $1,510, it qualifies.
So the gotcha here is when the appraiser goes
Oh, it
out,
is on there.
he's gonna do a rental cash flow analysis, and he's gonna say the market rent for this property is $1,500. As long as the mortgage payment is $1 less than that, it's approved.
Yes, sorry, that was important.
Which,
So-
if you're putting 20% down on a property, I would hope that you're going to be getting positive rent out.
Is that full boat monthly payment or just
PITI?
PITI, okay.
No HOA or anything.
I think that is taken into account too.
That's kind of.
But I mean, you think an HOA? Well, I don't know.
Usually on a
but-
condo.
Yeah.
Yeah, I mean, I would think HOA is probably paid for by the renter if it's a condo. I could be wrong.
Usually.
That's y'all's world. I would have to check on that, but I'm not 100%
So
sure.
they have to get an appraisal and a rental analysis, or just a?
It's all done in the appraisal that we order.
Okay. Is it like the same, or is it cost more?
No, same cost.
Same.
Yeah, it doesn't cost any extra. But I mean, the big thing here is we're not looking at tax returns. We're not looking at W-2s. I'm sorry, we will look at bank statements. But no pay stubs. We're not looking at how much the person makes, borrower makes, period. So good for investors who might have good cash flow, but when it comes to tax season,
They don't claim the
take some
tax.
liberties.
The only reason when they look at the bank statements to verify the funds to close.
We just want to make sure we got 20% down.
They're not looking at the bank statements for income, just funds to close.
So again, I think this is a good alternative to hard money if it is something that you're looking to. I see this doesn't work to flip because most people, when they want to flip, they want to buy it for 100, put 100 into it, and then flip it for 3.
Yeah.
And they need that $200,000 loan to do both, the buy and the reno, because this doesn't work for that.
Right.
Wait, so one more question. So is this gonna be rent, so say I have an investor right now, she wants to buy with her LLC. Do y'all lend to the LLC, or will you just lend to her personally?
So it would have to be lent to her personally. What most people do is quit claim it to an LLC post-closing.
And the mortgage company doesn't get upset about that, the change in name, ownership, or that even.
You can get a second mortgage on your
Yeah.
house you bought yesterday.
Legally, they have the right to call the note due.
They never do it though.
I've never seen it happen. Yeah. Does that make sense?
Gotcha.
Any other questions here?
What are the unit limits on conforming now at the moment? You know, how many can an investor own?
You can have 10 I think it's up to 10 finance properties. Whereas this, there's no limit on the number, but I think the maximum liability is like 5 million or something like that per person. And you can go up
That's
to
a lot of
1.
properties.
You can go up to 1.5.
And that's what they owe, not what they're worth.
More questions here? We good? Useful? All right. Bank statement loans. I did a $2 million bank statement loan last year. So, biggest thing, no tax returns required.
This is a very popular.
No tax returns, no W-2s, no pay stubs.
So is this for a normal
This is
owner?
for-
This could be for anybody.
This is not for.
Yeah, this could be
For me, with a W-2 income, or you self-employed?
this can be owner-occupied, second homes, and investment property.
So it's good for everybody.
Now, is this something different than the investor cash?
Yes.
Yes.
Oh, it is?
Yes.
Okay.
Yep, this is something different. So here we're going to look at either 12 or 24 months of personal or business bank statements. Big old spreadsheet that we use to track deposits, and we basically come up with a rolling average of income based on deposits.
But we don't ask where these deposits come from.
Excuse me?
We don't ask where these deposits come from.
So like a drug dealer, this would be a good.
Well,
Dealer loan.
if you have average income of $15,000 in deposits per month, then all of a sudden, October, you have 150, they're gonna question it. What you think? That one big deposit. Or
Can't
no.
be a drug dealer.
No.
Because
Right.
here's the gotcha for that. You've got to have a business license. You've got to be self-employed for at least 2 years.
Okay.
So you've got to be a business.
You can't be living off a check from grandma or whatever.
Yeah, I don't think you're going to qualify on a check.
Any
from
good
grandma.
drug dealer is going to have a front business and cover business.
So like a housekeeper, they'd have to have an LLC.
A license.
Yeah,
Okay.
license.
Got it.
Yeah.
Not a license, but registered.
We prefer them to be registered with the
state.
With the state. Have an actual business license that we can track that it's been in business for 2 years.
Okay.
Secretary of State. Gosh, yeah, Secretary of State. But rates are in the high fives. I mean, this is good for people who take liberties on their tax returns when they're self-employed. I mean, we see it all the time.
Don't we all?
Talk to people who say, I make $150,000 a year. You look at their tax returns, they told Uncle Sam they made $48. You know, I mean, this
Well,
is
they just
this
have
is
good
for-
write-offs and good accounting for
Yeah,
car
they've got great-
expense and
great accountants,
home and
Marty.
office and
Great
all
accountants.
that.
Cell phones, mileage,
Yeah.
equipment,
Yeah.
advertising.
And you have to have a business account. business statements.
You-
You can't just have personal
You could do personal as well.
only.
You could do, yeah, we can do kind of a blend. But you can do
What if
personal
you
or
don't-
business.
What if you just have the business, that you could use the personal?
Yeah,
Yeah.
Oh, okay.
yeah, yep, exactly. Let's see, tier seasoning.
Another good example, if a hairdresser, they have a license with the board of whatever. Someone that cuts the grass, they don't have to have a license, but they have 3 trucks or 2 trucks, whatever. They're going to have, would they take website advertisement?
I mean, this is good for people who have either cash businesses or people who are lenient with their tax returns.
But they have to be in business for 2 years. They can't just.
Yep, it's got to be at
they
least,
can't just
that is a,
register later and then say, but I've been in business based off my statements, but I just registered my LLC.
it's got to make sense, I mean, some of these are hard and fast rules. A lot of this outside of the box industry, because it is privatized, do operate with exceptions,
Is a real estate license good enough license?
as long as it makes sense.
Yes.
You know what I'm saying?
But like for housekeeper, and I keep bringing that up because my housekeeper literally wants to buy a house this year. So. And I mean, this is a core problem because
She gets a lot of cash.
she gets a lot of cash, and that's how I pay her, and so it's
Is she
definitely
by herself or is she?
it's her and her mom. So.
Like I said,
Mary
she's
and Lisa
married.
House.
She's married, yeah. So
I
there's
said-
her husband's income, but she provides a lot of income.
Yeah, a lot of this is common sense lending.
Yeah.
Kind of, we're going back to a little bit of common sense lending where I would have to look at obviously the details and everything, but
Yeah.
I want to say it would work for somebody like that.
Okay. The whole business license thing is like, I don't know that there is one for that,
Yeah.
so, okay.
I'm sure there have to be
But she
something.
might have some E&O insurance. That somebody said, you better have E&O if you break something in your house. And maybe she has it. We're gonna talk to them and ask them these questions.
I don't want to
Okay.
give you a hard and fast yes or no, but I would say
Yeah.
that this would be something
Right.
for that.
Or if
Okay.
she's going to
If
wants
she's
to buy a
actually-
house, she should go get a business license.
Right.
Yeah,
Now.
and an LLC
Early.
is nothing. It's just $100.
Yeah.
And
But I mean-
it's 10% down.
Up to 10% down,
Up
Okay.
to okay, so
or at least 10% down.
oh,
Okay.
okay. I'm about to say I pay 3.5.
No. So bank statement loans. I mean, rates in the 5s. I mean, guys, we're not too far off of that with normal loans right now. We're mid 3s, low 4s.
Right.
So
What does that mean, non-warrantable condos?
Yeah, I was wondering that too.
perfect.
Right.
A non-warrantable condo doesn't meet Fannie Mae, Freddie Mac guidelines when it comes to how much money the board has in reserves, how many people are delinquent on their dues, what's the investor to owner occupied mix. It falls outside of that box.
Right.
So if you got a bad HOA, this might be one you consider.
And actually one of the programs I'm going to talk about is strictly for non-multiple condos and what are their, it can't be run by cockroaches and stuff, but it expands that box a little bit. You know what it is?
This is the one where I saved this lady I met. Asset depletion loans are for people that have lots of assets: stocks, bonds, cash, 401ks. This lady I talked to at a charitable, she was running for charity, and was talking to her at our booth years ago, and she, I can't get a loan. I don't have any income. And I'm like, well, how do you live? She goes, well, I got a pretty good settlement from my divorce. And she did. And I said, well, we have a loan. We're going to take your assets. We're going to take certain percentages out for 401ks and stocks and IRAs, but we're going to take your cash and use 100% of it and divide it into 15 years. That's your income. So again, we're going to take 401k, cash, stocks, bonds, take certain percentages out for IRAs because there's tax
I
implications
think
on it.
we give like 100% credit for checking
Okay.
savings,
Right.
And then if it's a 401k or an IRA, it's like 70 to 80% is what we give you credit for, just because when you take money out of those, there are tax implications, so it's not 100% liquid. And as long as those assets are 1.25 times the loan amount, you're approved. So you don't have to have, this is good for, like you said, somebody who just got a settlement
Mhm.
and isn't working, or somebody that possibly just retired and has a lot of cash in the bank. I like to think of this as like my retired NFL player loan. You know, I just got out of the NFL, I've got $16 million, I got no income, I can't buy a house. And I don't want to use my cash. As long as they've got 1.25 times the loan amount, rates in the fives. Got to put 25% down.
They have it though.
They have
But
it.
yeah, they've got it plus that.
Right.
What's DTI?
Debt to income ratio.
Debt to income ratio. There's no debt to income ratio because there's no income. There's no I.
Right.
It's assets.
There is no. This is strictly based on assets.
So you want good credit.
This young lady bought a house 60 days later. She bought a house for $575,000. Her income is $15,300 a month. I got 7 clients after that.
Yep.
They're very happy when they find out about this loan.
This is primary residence though, purchase only.
Yes,
So this is
primary
not for
residence.
investors or
700
second
credit
homes or
score.
anything.
Do you? I've heard of
Primary
people
purchase.
saying they wanted to get a mortgage through their, big brokerage firm based on their stock account. Does this kind of compete with that? Same kind of thing. It sounds almost like.
See, those types of companies, they're basically loaning you your own money.
You're secured, yeah.
Right,
Yeah.
so it's a margin
got
account.
stocks and bonds.
This
and
is-
stuff.
Very well said. Margin account.
I wouldn't say it's the exact same because, I mean, it's still securitized. It's still secured by the property.
Right.
And you're still keeping, it doesn't matter where you have your cash.
Yeah.
Or your stocks or your bonds, as long as you're bringing the 25% to put down. So, I mean,
But it's the same
again,
kind of people that got a lot of money in an account somewhere. And
Yeah, I mean-
assets.
you know, if you're like a Morgan Stanley client, you've got $16 bajillion there, of
Yeah.
course they're going to loan you
Sure.
whatever. They're loaning you your own money and you're paying interest on it.
Yeah.
And your interest rate on a margin account is a lot lower.
Yeah.
Yeah, I would. Well, I mean, it's your own money.
Yeah.
Yeah.
But again, I go back to people are scared that a lot of these programs we're going back to the bubble burst. But I mean, you can see, well, I mean, what's the risk here? Could they pay it off if they need to?
Yeah.
Yeah. Would they walk away from it? Well, they could, but we've already got 25% equity. So, and you've got to have it's got to be their home,
Yeah.
primary residence. You got to have a 700 credit score.
Yeah.
So my thing is, I'm just trying to figure out how will I be able to sell it? Because if they already have that much cash, why wouldn't they just buy the house cash?
Because they want to keep their cash. I have an actress. I did an actress. Think about the Atlanta area. She went through a big show season for 8 years and made really good money and had a lot of money in the bank. She was waiting for her next, she had a contract on the next show she was doing in a movie, but it wasn't starting for 6 months. She had plenty of money in the bank. We did this loan for her. It was perfect because she needs to keep money in the bank because she don't know when her shows are going to get canceled. That's why. Same thing with a football player. What if they get hurt? Baseball, basketball.
And what I like to say is, and this is from a financial planning standpoint, is so let's say the interest rate is 5%. On your tax rate, the effective interest rate is probably closer to 4%. Okay? So you're paying 4% on the money. And if you were to pay 100% cash for it, is that money liquid anymore?
No.
No.
Can't earn any money anymore.
And some
You
people,
can't earn the money
and some
anymore.
people that are stock
So-
traders, they think they can earn more than 5%.
So
on their
if you
account.
think that your investments, your 401k or just the market will earn more than your effective interest rate of 4% and it's liquid, I would rather have my money, I'd rather pay 5% interest and keep all my money or most of my money liquid that's earning a higher interest rate.
Is
that make
this
sense?
new? Is this program new?
Mm-mm.
No.
No. We've just never done this class before. So, questions on this one?
And the purpose.
This is a fun one, because there's like-
products for everybody out there.
Yeah.
I mean, there's no employment. I mean, give me your bank statements. We're good.
Yeah, this seems great for a widow that I'm working with, you know, because
Yeah.
the money's in the
Yeah.
bank and she's scared to do anything with the money, so.
I mean, and as people get older, they're thinking, you know, I'm going to buy this condo. My client closing Friday. He just wanted to put 3.5% down. I'm like, gosh, he just walked away with $120,000 on the house he just closed yesterday. But I see why. I mean, he's disabled. He needs wheelchairs. He needs cash, and that's why he's doing it. So.
Yeah.
For older people, this would be an alternative to a reverse mortgage. Some people have wanted to
Absolutely.
do a reverse mortgage to not,
We do reverse mortgages too.
yeah.
That's
And
a whole
the-
separate class.
Yeah. Actually, we personally do not originate them, but we do have someone in our company that does. And they are not the reverse mortgages that they used to be. We sat through a
class.
like a
I've
3-hour CE class on reverse mortgages, and I know what they used to be and I know what they are now, and they're nowhere close to what they were.
Better or worse?
Way better.
Way better. Yep.
Way better protection for the borrower, the borrower's family, the banks, and just better for everybody. Way more regulation now than there used to be.
That's a separate class, and we would bring in that expert.
This last one, I don't think is actually true anymore. We have a couple different investors that will do this program. They've got to have at least $500K after they close. I don't think that's, scratch that if you're taking notes. All right. I just had a foreclosure. Paul, can I get a loan?
Yes. When was it?
Yesterday.
Yes.
Okay. All right. So these are how much time you've got to spend in the penalty box for bankruptcies, foreclosures, short sales. So we've got conventional. So again, we're kind of inside the box here. We're talking 4 years for bankruptcy, 2 years for FHA. Foreclosure, I had it 7 years ago. Conventional, 3 years for FHA. What if I don't want to wait that long? Okay, we have programming for that. And again, rates in the 5s.
Wow.
But, got to be putting 10% down, and we are going to look at your debts and your income. I mean, you will, and actually, I'm not sure if the 90% is correct. I think it might be a little higher than that. Or, I'm sorry, lower.
Lower.
I
Yeah.
think it might
More
be
of a higher down payment.
higher down payment, yeah. But you can be 1 day out.
One day.
That's amazing.
You can be 1 day out.
That is amazing.
Now,
And why would people want that? I've got 4 kids. Where am I going to get an apartment with 4 bedrooms?
so here's what I will say is that rates would start in the 5s if everything else they had on their file was perfect. Okay? If you're a 500 credit score and only putting 10% down and you've got a really high debt to income ratio, your rate's probably going to be in the 8s.
But if it's
Okay?
cheaper than rent.
But if you're
Yeah, but if you just had a foreclosure, you got to buy a house.
And you've got 4 kids. and
Right.
If your wife
But
and
if
2
you-
dogs, I mean.
if you're putting
imagine what
20,
you-
25% down and you got an 800 credit score,
But if they just came out of a foreclosure, where they gonna get 20% cash from? That's-
you mean a bankruptcy?
Well, yeah, or a bankruptcy.
They might have a 401k that the bankruptcy cannot touch.
So I've closed a few of these, and this was a situation that I had.
Okay.
He was, his family still lived in Indiana. He worked down here like 5 days a week, and he was commuting back and forth. He was paying a little 1-bedroom apartment. He was paying like $1,600 in rent for this one little 1-bedroom apartment down by the airport. He had a foreclosure like 3 or 4 years ago. So he didn't qualify for normal financing. So even though his rate was like in the 7s, he was still paying less on a mortgage payment for a little 1-bedroom condo than he was in rent for his apartment.
Would you qualify for FHA?
He didn't qualify for FHA. I can remember, this was a couple years ago, but I can't remember the specifics of it, but this was the only box that he could fit in, and it still made sense for him.
Yeah, 1 day out of foreclosure is not
Because he's-
extreme, but 6 months or a year, you've had
And there's even- and there's
big
even-
deal or something.
And like I said, a 500 credit score and you're 1 day out, you're going to get absolutely slaughtered.
Yeah.
Because you're going to get a little bit better rate the further away you are from these events. If you're a year or 2 years, you're going to get a little bit better rate. So just know that they start in the 5s, but if you're down here on all the other things, you're going to get absolutely slaughtered on rate.
But we offer the payment to them. They're gonna ask their rate, but here's your payment, how do you feel? They might go, it's better than my rent.
Because what other options do you really have?
So could they do this and then like in 2 years or 3 years once?
Refinance.
Refinance
Yep.
with a regular and
Yep.
get a lower rate.
Yep. Yeah, this could be a Band-Aid. This could be a Band-Aid.
It's a nice option.
So what would you prefer, refinance it to another loan or put a HELOC on the property instead?
Refi.
I would ask, what's the like with this
Because then what happens-
this situation?
Well, because if they have that much equity, like, I mean, they already put in like 10% down, maybe 20.
At least.
Or 20% down, and they did a home equity line of credit in place of it, then they would be able to have a lower payment. Because
No bank was gonna give them a equity line of credit with a foreclosure.
Okay.
Banks are very strict on equity lines.
Yeah, and they've got
680 minimum credit score, 80%'s the max, it's 680. They'd have to have a 740
second
to get
second mortgages
90,
are harder to get than first mortgages.
especially equity lines.
Yeah, because it's basically a credit card linked to your house. Questions? Lunch should be here 6 minutes ago.
So this is not asset depletion, but this is
Nope.
housing.
Yep. And I've got this whole slide deck. I don't mind sharing it. It's not proprietary information or anything. Yeah, so that was basically your. I mean, it says you can do 1 day out, but it's for people who don't qualify here.
Right.
Yeah, I can see that working for somebody that had a business that went bust and they got another deal cooking, and a year later they've got a new venture going and it
And they need
pops,
housing.
and-
They need housing now, and they
Yeah.
know that they can be able to qualify for conventional
Yeah,
loan in a
they-
year or
People
two.
downsizing use the asset depletion a lot. Because they say, okay, I'm fully retired now, I'm selling my $3 million home that was paid for. Now I'm gonna do this, asset depletion, back to the asset depletion. Because they want to keep the money in the bank, because they're 58, 60 years old. They know, their dads and parents and all that lived to 90, so they want to keep the cash in the bank. They don't mind making that $2,000, $2,500 a month payment. That's nothing.
Yeah, I like.
I like this one. I like it a lot. Somebody's here. Is that our food?
Come in. Feed me.
Oh, that's y'all were.
Oh.
False alarm.
So when our clients, want to shop rates and stuff,
Yeah.
these clearly sound like things that not every bank is offering. Are
No.
they things that lots of people are offering?
No,
I mean,
and
what's
we're
the reality.
we loan out. We're blah, 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 blah. We're what's known as a correspondent lender.
Okay.
So we're in between a broker and a big bank. So a broker is going to take your loan. They're going to shop it to 30 different banks. Once they find a bank, they're going to hurl your loan over the fence, lose all control. They don't fund in-house. They don't process in-house. Paul's shaking his head because he used to work for a broker. You also used to work for a big bank. And
I hate
we're kind of in between, where we do all processing, underwriting, funding, everything in-house. And for some of these outside-the-box programs, we work with 16 different investors, and we underwrite based on their guidelines. So
We might broker out to one or two of these companies.
we don't really broker any loans out.
None? Oh,
Well,
okay.
we can, but all these we can do in-house.
And so
Does
like.
that make sense? So if they want to shop,
Yeah,
there are very few.
places to shop something like this.
There might be a bank that has one or two, and another bank that has one or two, but not a lot of companies that'll have the full suite.
Right.
And I get it. If you're those types of clients, rarely are shopping right.
I mean, it
They're
makes
happy that they
sense.
can get they're happy they can get approved. Period.
Yeah, it makes sense.
What did you say you're, what kind of broker?
We're
Correspondent.
We're a correspondent lender across the board. That just means we're in between a bank and a.
We're originating, processing, underwriting, and funding the loan, but we will sell it to our parent company. So,
We bundle our loans and sell them to Fannie Mae and Freddie Mac. We're a direct seller to Fannie and Freddie. For the conforming loans, these will go somewhere else. These are the outside of us.
There you go.
very complicated when you get to start figuring all that out.
Yeah.
Okay, we did this. So, non-multiple condos. Ernie, what's a non-multiple condo? Because you got here late.
What was the question again?
What is a warrantable condo and what is a non-warrantable condo?
Don't call him out like that.
Go ahead. Let me get your explanation.
A warrantable condo is a condominium that is able to be backed and financed with conventional financing and backed by Fannie Mae and Freddie Mac.
It fits Fannie Mae, Freddie Mac, FHA guidelines. They have to have a certain amount of reserves in the bank for a rainy day when the roof needs to be replaced. Gutters need to be replaced, termite, anything.
So,
It protects us and it really protects the borrower. And that's what we tell our borrowers. They're doing this to protect you. Imagine a termite infestation. They're gonna, they've gotta have the money in there to bring it in to fix it and treat it.
So, I like to think of these as we get back to more common sense lending, is if you've got a buyer and they want to buy in this condominium project, but there's one of these things, let's say that there's a 50% of the units are investor owned. And Fannie Mae and Freddie Mac, they'll say, no, that's too high of a mix. You can't buy in there. You've got a buyer who, I want this unit, I can't buy it because of something
That's out of our
through
control.
no fault of my own. This is where these programs will
Yeah,
come
then
in.
you're stuck with cash buyers only. That's where a cash buyer come in and scoop up a bargain.
Yeah, or the single entity ownership. Let's say it's a condo project with 10 condos, and there's one person that owns 2. Fannie Mae, Freddie Mac, they won't like
They
that.
hate that, yeah.
But here, you can go, they could own up to 3. So, I mean, you could go up to 30% of the project. Or, this is the biggest one, which, this one, I don't sleep very good at night knowing this one. But, delinquent HOA dues. Fannie Mae, Freddie Mac, it's no more than 10% of the units can be delinquent on their dues past 60 days. This, you can go up to 20. That's the only one that I really don't like because if the board is not being funded by if your neighbors don't care enough about the project to pay their dues and the board is not being funded properly, then I think a lot of these the maintenance or deferred maintenance,
it's gonna
it's that, I think that kind of has a escalating
Domino effect.
But these other ones, this is a big one too, this commercial use, this is starting to be very popular now.
Is that an Airbnb? What's a commercial use?
So this would be like a
Work live.
exactly, thank
What?
you, like a
Work
work
live.
live.
Oh, work
With
live.
So-
offices and.
So think about like Avalon or Halcyon.
Halcyon, big time.
Serenity.
Where they've got businesses.
Restaurants below, condos above, and then the other buildings, apartments. We don't care about that. But
Yeah, Fannie Mae, Freddie Mac, they don't like those. Whereas this, we can go up to, and this is based on, just so you know, this is based on square feet. This commercial use is based on square feet. Up to 50. So it could be it could be majority commercial use and have the apartments or the condos up top, and still work for this.
So for the non-wardable condos, so if they make this their primary residence, does that even matter? If they're using a primary loan and they want to move into a non-wardable condo, Freddie Mae and Fannie Mae still play a role in that? Or is it just if it's an investment property?
No, it's the primary residence. Like if they're using conventional inside the box conventional financing, and it even comes close to any of these numbers, Fannie Mae, Freddie Mac will not approve it,
And FHA?
or FHA will not approve it. Because what's the first thing we do as lenders when y'all go under contract on a condominium?
Ask for the condo docs.
Condo questionnaire,
Oh, yeah.
where they've got to fill out how much is commercial use, how much is it. They've got to answer all these questions plus an additional 15.
They have to give their cash flow for the year.
Yeah.
P&L.
And if it is, if it's one unit outside of Fannie Mae, Freddie Mac, FHA guidelines, we can't do the loan.
And you know how many people say, oh, but it's perfect. I want to live, the pool, the area, the shopping, the
Have you not seen it? There's an Applebee's downstairs, man. Come on.
It's awesome. There's a bar. No.
So this is where these come in. But this is for, you saw on the beginning slides where it said, like at the bottom said non-workable condos considered. That's what these are.
So question.
So you could still do a non-multiple condo on a bank statement loan. Or, not sure about that one.
So I've seen on some listings where it says it's a condo and it'll say no FHA loans.
Yeah.
Why is that?
Because it's not approved by FHA. They don't want to get approved by FHA.
But
But
It could be approved through this or conventional? Could it be approved through
all right,
conventional?
a new rule started January 1st.
Okay.
So if you go to this condo development and they said, no FHA, we're doing spot approvals. So we get the address, we get the condo questionnaire, we get their P&L from the association, we send it into the FHA underwriter, they look it over and they say, sure, we'll approve this.
Just for that one
That
unit.
for that one condo. But once that one gets approved, it's a domino effect.
Right.
so basically the way that wording is in there is a little outdated.
Yeah.
Because the way that it worked up until January 1st of this year was the condo board had to submit their documentation directly to FHA for their entire condominium to be FHA approved.
Right.
And they didn't want to do
But
that.
there was upkeep, they had to do it almost annually. A lot of them just fell off, and the number of condominium projects that were FHA approved kept going like this, to where if you were an FHA buyer, your options were very, very limited. So to combat that, what they just passed January 1st was spot approvals,
Okay.
which means even if they're not on this list, you can still use FHA financing to buy in these other condominium projects. And they're not gonna spot approve the entire condo project. They're gonna spot approve
That unit.
unit 516.
Okay.
The bad thing, I'm sorry, go ahead.
So if we have like a listing, so I had a listing of condo last year, ended up pulling it, but they still own it. They would love to sell it, and the neighborhood was posting like no FHA approvals or whatever. Not FHA
That is not
approved.
anymore.
So I would
And
need
it's
a
a good thing
spot
for-
approval though. So if I list it again, like I should.
I would order a condo questionnaire before you listed it
Okay.
and send it to us,
Okay.
and we'll look at it.
Okay.
If we see 28% are investor owned, we're gonna say,
Right.
you're gonna have a problem.
Okay.
Let's put it this way: if there are other sales that are happening that are conventional, you should be fine.
Does it take long?
Because the FHA questionnaire and the guidelines are almost mirror 100% what the conventional
Good way to
guidelines
do
are.
it.
So how long does it take to get this spot approval? Any increase in processing time for FHA to do their thing?
You know, we haven't had too many of them, so I haven't seen an increase in time.
To get a
Because
whole
I said-
place.
No, just for the spot.
Yeah, the whole place takes a long time.
Oh, okay, yeah.
One, We don't know yet, so.
No, if it meets, like I said, if it meets.
Oh, and this just started
conventional-
January 1st, you said? Oh, so
Yeah.
it's not even a month old. Okay.
Yeah, so.
Right.
But again,
How
go
long
back to
is
the.
that status active? So like if I got
Well,
a
I mean-
spot approval, would it be active for 3 months or 6 months?
Well, that's not, on a
Approve the
listing
deal.
side, you're not getting a spot approval.
Right.
Okay.
It's the
buyer
buyer
needs the
side.
approval.
Mhm.
Okay.
Yeah, so I want to buy your condo. I get the spot, I get the spot approval to purchase your condo using FHA financing. This is, in my terms, it's as good for as long as I live in the condo, I guess.
Yeah.
And Unit 516, when you sell it in 3 years, if somebody's buying it FHA, FHA is gonna wanna see the condo questionnaire again.
Right.
And it's not that big of a deal to get one. They're all electronically done now.
Yep.
They cost money, but.
Yep.
Yeah.
Now, go back to the conventional. If you've got 4 units in there for sale conventional, that means they're gonna get approved conventional, and they mirror the rules and guidelines, or mirror each other.
I would say it'd just be worth a phone call to reach out and say, hey, are you aware of the FHA? They call it single unit approval that just went through
Okay. FHA single unit approval.
because it mirrors conventional condo questionnaires.
So essentially, if you have a buyer that's thinking about a condo, we need to get that condo questionnaire before we even go too far into the process. To make
I would
sure-
just make sure that we're able, because again, it's the first thing we order.
Mhm.
So
You know,
I would
you
just
know how
make.
buyers are, they see this condo, they want to move into it, but we don't know if, if they might be FHA, can they go into it? So that questionnaire would provide them an insight, even if they need to do a spot
Yep.
approval. That's what we need to do.
But it also depends on, how, you need to act quickly on that.
What-
That's the thing.
What I think you need to,
Yeah.
Ernie, think about it this way. Conventional, if you've got a conventional buyer that's shopping in a condo,
Mhm.
it's the exact same now as FHA.
Okay, but I'm just thinking about that spot approval that we need to go because,
But that's the same thing conventional does too.
They do the same thing.
They're looking at the same things.
okay.
So don't automatically think that if you have an FHA buyer that it's
order
almost
this
the
stuff.
same. It's what we're saying is it's almost it used to be way different.
Mhm.
Used to be the list.
Mhm.
Used to be this.
That's what I was referring
and
to.
now they're basically the same.
Okay.
And we're gonna order these things 2 or 3 days after we get the contract and get it in our process.
We'll order them. I mean, as soon as we can.
Now, to this point, what is the timeline? Because we get in multiple offers situation. How does that work?
On the buy side,
Yeah, on the buy side.
this will just fall into your due diligence period.
Okay.
Because we're
Cash
gonna
would
order,
be hard to be. It'd be better to be cash buyer, or go to the top of the list, I would think.
Yeah, but my buy's in that cash.
Yeah, that's what I'm saying, the cash will be better.
Oh, I know that, yeah.
And then,
and let me add something. All companies that order these condo questionnaires and all that, it's done electronically and it goes to a separate department that's gonna look at it. And then they're gonna call Matt and say, Matt, did you see the questionnaire yet? No, I haven't. Oh, it's 35% investor owned, and we're gonna know right away. FHA's not gonna do this. And we
But
stop.
neither would conventional.
And neither
So
would
that's what we're saying
conventional.
is they're basically mirroring each other now.
Well, no, that's good to know because in the past, in my previous dealings, we had that list to see if there were.
Don't worry about it anymore. Now, you wanna check the list, cause it'll.
No, if I don't need to worry about it, who cares?
Yeah, I did the one closing Fridays, approved FHA condo. And it was just easier, because all the paperwork was on file.
They're basically handled the same now. I mean, if you were to put what FHA and what conventional is looking for in a condo side by side, it's not going to match up 100%, but pretty darn close.
Thank you.
And it's some weird things that you wouldn't normally think of. Not like this stuff.
Okay.
Not investor owned or commercial space.
Thanks.
And again, these non-warrantable condos, these are outside of the box condos that the mixed use, live, work here, play here
Mhm.
issues.
do you think Avalon, a place like that, it would be a good thing to have Avalon underneath your condo? That would help support it, but I don't know, that's weird.
But see,
Those are rental that I.
think about what Fannie Mae and Freddie Mac are doing. They are securitizing properties, and the number one factor is based on risk. So what if you're above a God? What's a good? What if your condo was above a Blockbuster?
Oh, yeah, if you're, yeah.
You know, what if it just carries more risk because it's made up of commercial space?
What's the down payment required on these?
I want to say it's between 15 and 20.
Okay.
Yeah.
Because there are a lot of live works that are going up. So.
Yeah, I mean, look what they're doing at North Point Mall.
Oh, yeah.
What are they planning for that? I haven't heard of it.
I think it's way above 55%. I don't think we're there to 55% yet.
Well, how are they gonna get financing then for the people that wanna buy it?
That's cash.
There are some companies out there that specialize in these condo-tels. And
So is that what they're gonna do at North Point Mall, put condos?
They've already
in?
shut down
Sears.
and this is totally unrelated to this, but I think they've already shut down Sears.
Sears is shut down.
And they're turning it into
Lost space or something?
little apartments,
Awesome.
condos and apartments.
In the Sears, old Sears store?
Oh, Sears.
I was talking to, I was talking to an agent the other day. He said I had to get I had to get new tires, so I went down to Sears because that's what I've always done. And he went down to Sears at it might have been down here or something. He goes, I walked into Sears. It was a 3-story Sears. He goes, there were 3 people working, and 2 of the guys were playing ping pong.
Because everybody's ordered everything online.
I don't think malls will ever truly go exist, but I do think there's going to be a massive shift. And there's all this real estate. They take up a lot of space.
It's cool.
So
It's gonna change.
we didn't touch on litigation, but litigation is big. Again, we talked about Fannie Mae, Freddie Mac based on risk. If there's a pending lawsuit, Fannie, Freddie aren't too favorable there. As long as it's not structural in nature, doesn't affect the marketability, and the insurance policy is sufficient, then
How about tax liens?
tax liens, like the condo board isn't paying property taxes.
Right.
Ooh.
We'll check on that.
Well, the individual units are supposed to pay the property taxes.
No.
Well, not on the land. Not on the land.
I think that'd be a different. I don't think that's not even litigation. That's like
It's a lien.
that's a
Okay.
lien, I guess. I'm not sure about that one. Where my Jimmy John's at? They're supposed to be freaky fast.
I just texted your. Oh,
I think this is the last one I have. Yeah.
Deb is calling now.
Looks like 6 sandwiches for you, 6 for me. This is the last slide we have, y'all. It's on foreign nationals. Does anybody work with foreign nationals?
Not at this point.
What to do?
Rates starting in the 6s. So this is. What's a foreign national, Ernie?
Person is here without a green card or any citizenship. They usually have a tax ID.
Or a visa.
They don't have a social security or anything like that.
Yeah.
Without a green card.
A visa without a green card.
Yeah, without a green
So
card.
how they able to buy property here if they don't?
It depends on their visa.
Yeah.
Uh,
A lot of times they use someone else to buy property in their name.
like
Yeah.
H-
Stop that. That's called a straw buyer, and I
Yeah.
learned about that.
Sounds like something else.
It's happening out there.
So where do you find these people? Ernie?
Don't answer that
He goes,
question.
so I shop a lot of my loans at the unemployment office. He goes to the immigration office.
Actually, right outside of Home Depot. You get a lot of
But there's a class of what their visas are labeled.
Yeah.
HB1, HB2. There's there's a list that we have.
There are acceptable visas that where they are not considered a foreign national, but there are also visa classes that are not acceptable. There are also countries that are unacceptable. We do have a foreign national program. It still has country restrictions.
What are some of the
What are those
countries?
countries?
Iran,
Well, yeah,
North
those.
Korea.
But South American isn't impacted.
I don't know the whole list.
Okay.
Don't run into it that often, and when I do see it, I mean, most of the visas that I see are mainly from Europe, the ones that I've
The
seen.
ones I'm dealing with come from Honduras, Cuba, around that area.
I'd have to look at the list. But
But
there are fewer
it's going to
restrictions
be
on this
obvious
program.
because of what their visa's listed as. You can't believe the list of the numbers of different visas.
And on this,
Amazing.
Ernie, you don't need a tax ID number.
This
For-
is
for
new,
this
you all,
program.
right? This
Say
is-
what?
This is a new program that you guys offer?
It's not new.
For the foreign nationals?
We've always had a foreign national program. There's a couple of different investors that we work with, and one of them does not require a tax ID number.
It's good to know.
Okay? Like we said, non-multiple condos are considered. No social security number, no tax ID number.
The
So
hardest
where-
part is the credit report.
Yeah. No. No U.S. credit required.
But we still have to get it from that country, like bank letters.
I don't think so.
Really?
So where are the gotchas? 25% down. Rate starting in the 6s. 12 months reserves. Those would be the gotchas.
So that means 12 months of paying their mortgage?
So when I close on the house, I've got to have enough money in the bank to cover 12 mortgage payments.
Oh, okay.
That's
Does it have
what
to be a
that's what
special
reserves
account?
are.
Does it have to be put in a special
So-
account or just verify that it's there?
Verify it's there.
So just the mortgage payments, if there's an HOA?
That would count too. Yeah.
That would, okay.
Yeah. 12 months of housing expense. Mortgage plus PITI plus HOA.
In the old days, you didn't have to have any of this. I mean,
Yeah, I mean, I think this is, I mean,
We've all learned
there
a
is more,
lesson.
there's definitely more risk here, but I mean, they're paying for it in rate. That's the front desk, I think. Hold on. Hello? Is Jimmy John's here? Can you walk him back to the training room, please? Thank you.
Still a great rate considering.
Yeah.
Let me
Because-
ask you something, with the rates starting in the 6s though, let's say they can do everything that you have on the screen right there, and several months later they want to refinance.
if they have the equity, yes.
Well, if you're saying that they've gotten,
They got the
They got-
12 months reserve, they got, putting down 30,000-40,000 down.
They
But
get their social security number.
they don't have a social security number.
you're saying they purchase using this and then down the road they refinance into.
They're inquiring about refinancing. My question is, can they do that, to lower their rate?
So you've got somebody who
They
they own it right now,
Mhm.
and they're paying 10%.
They're paying
Can
in
they
six.
can they use this to refinance? Absolutely.
Okay. That's it. Because they came in high, they knew they were coming in high, and they said, we could probably refinance, down the road. And if they can refinance, then it's fine. They
Yeah.
have the money.
I mean, a loan is a loan is a loan is a loan for
Okay,
us.
gotcha.
The only difference between purchase and refinance is refinance. They already live in the house.
Just want to make sure I was saying it correctly.
A loan's a loan's a loan's a loan.
I like that.
We don't run into these too much, but I mean, I see this with the ones that I've done was somebody who their company was headquartered out of Europe, and the company moved him here, and he had no U.S. credit. He had a social, but he had nothing else. He had no credit. He had no. He had never filed tax returns here, etc. So this was able to work for him.
But you have to have a visa at least, though.
He had a visa.
Yeah, that's something you
He did
can't
have
you can't be a total illegal alien.
No.
Yeah.
No. So, guys, any questions
I still have a question.
about any of the other programs? I don't mind skipping back.
Mine's still, okay, because I have my condo docs, because basically what it is, I have somebody, she wanted to go to the investment.
Food is ready,
route,
and there's drinks to the
and
left.
She changed her mind and she wants to go be a primary, she wanted to live in it now. She wanted to buy it as investment property, but now selling her other condo, she wants to move into and make it primary. But it's a non-warrantable condo. And I don't see how it's still going, how is she gonna still be able to get the financing on it?
She's trying to buy a non-multiple condo?
Yeah, she still wants it. She wants it.
Why is it non-multiple?
Because it has too many renters in it.
Nothing but cash.
Right.
What's the split?
I can look at it.
So I just close on the deal with my next deal.
It's,
This you can do up to 60%.
Then go refinance.
so it still limits though. Let me find out.
Thank you for lunch.
You're welcome.
And there was some water and
Thanks for
oranges.
sticking
too.
around.
Thanks for the class. Learning all kinds of stuff.
Yeah, and we apologize. There was apparently a mix-up between the printed calendar and the intranet calendar, so this never actually made it onto the intranet calendar. Ernest.
Mac, that was the deal that I was gonna shop with you on, and you can do it.
It's, the other purpose of like these
Because they didn't
classes
have
is for you all to keep hearing them.
Did my
So when somebody says, hey, you know,
He's not a
it's not
citizen.
ready, they don't
He
tell
has a
you.
tax ID.
Yeah.
You just say,
We've added.
hey, if you're not ready,
Yeah, I know.
at least
So
talk to
between-
Matt, Randy, or
Because he
Paul.
got
We've
Yeah.
added
$100,000
About
in
all
a
the
checking account.
alternatives.
We've added 2 new
Things they can help you do, the credit,
investors
the credit
that
extra
reach out.
thing,
I might
the
have to
scores
look this
up.
one because he's happy right now. So he said, I got
I-
some more
I'm
friends
helping
that
my
are in the same
daughter
situation.
and
I said,
her
bring them to me.
fiance.
I might have
He's
them
an
under.
accountant,
We'll let 'em
she's
see if we can
a
fit 'em.
Okay, that's what I was talking
she's a
about.
nurse now, she'll be a nurse practitioner. And I've been sending them rates, I've been sending them estimates. And her fiance's like, dude, this is what I need. I know how much I need to close on a home here in 18 months.
Right.
Basically, Silver
And he
says
goes,
she can't.
he goes, his
They
big
can't
question
find
is, how
it
much do you
because
think I
it's
need to have in the bank after I put 5-10% down? I said, as much as you can. He goes, but I really want to put 20%
77
down.
units.
I mean, they've set their goals and they're on it.
Investor in units.
They got good paychecks.
That's too high.
They studied hard for
Can't
that.
get another one.
So that's what we want to help people with, to create that pipeline for the future. Because people don't want to tell you.
Up to-
"Man,
this is up to
I don't have
60.
money."
It says up to 60.
They're not going to tell you.
So,
You know,
yeah.
they'll tell us though.
Okay.
Right.
Just so,
I'd have to run it through and see.
We're going to pull it out of them
You
no
guys
matter
under
what.
we still are.
And if they don't, they're not going to talk to us either, and they're not
It's
ready.
60 days out. She's still trying to. She's trying another window that she wants to.
I had a VA guy.
I'd have to
Exactly
run it
what
through
you
and see, and run that through and
Sure
see
you can.
if there's anything else that's a trip up.
kind of pulled me to the side.
But
Because
that
I
number's under 60.
foreclosed on my VA phone in
She got good
2006.
credit. She has
I
really
lost
great
mine
credit, like in the
finally.
740s. She has
Oh,
the
would you
income.
know this?
She's
You know
an
you did.
attorney.
Yeah, I did. So
Then
you
I would
lost a
say-
portion of it.
And then what is the loan minimum?
I sat down, I got my
on that
VA
job?
calculator
Because
out,
this kind of
put all the numbers in.
71,000.
I said, you can buy a house up to
That's the thing
379,200, no
that
money
we've
down.
been running into. Like, we'll find one
You
person.
can buy a
She
$600,000
meets all the
house for
requirements, another loan is too
$50,000.
small. So she's
You
like,
want-
she's
Really?
really
That's
wants
to Lieutenant Colonel.
I know.
What do you mean?
She doesn't want to get up.
Send me a
$11,800
questionnaire.
a month without housing and food. We built a
She
house with,
qualifies on everything else.
women and closed,
Yeah, email me the
bought the
questionnaire and
model,
I'll look it over today.
closed like 60-something
Like,
days later.
Okay.
He was ecstatic.
If, as long as she checks all the other boxes.
But another
But she
thing,
checked all
veteran,
the other boxes, like the
It
limits.
didn't
like,
make as
oh,
much
you're
money.
really great, but
he could have bought a
it's the actual
$379,200
property. And
house.
she's like, I
Zero
want
money
this
down.
property because she can. This only
It was-
I know she can.
there's
Airbnb
so many
out in the land.
options
It's
out
in
there.
North Hills and it's cheap.
That's my 45. That's
That's what I'm
why there's so many
saying.
investors.
But it's move-in ready
Paul.
that cheap. Like, come on, like it's
What
a
is,
deal.
from your
I
perspective,
understand, but I wish she had.
starting the trend with all these new programs coming out? Because last year, these one go.
I can grab Stacy really quick.
There's a
Where
company
is
that
it,
sent out their numbers
It's
in
M.
an email this
Lip.
morning. They did $3.3 billion nationwide in these alternative loans. Not conventional, not FHA, just these type of loans, bank statements.
So they're seeing there's a market for it.
Yeah, it went up 52% from 2018, and they expect it to be the same this year.
If I had known about this, I could have done it last year.
Yeah, well, that's why we
Hold on a sec.
Not bad.
keep having these classes.
No. Bad.